Welcome to the Nebraska Soybean Board Weekly Market Roundup. It's being brought to you by Nebraska soybean farmers and their checkoff. I'm Susan Littlefield. We, as you can see, on location this week at the Nebraska Cattlemen's Classic that's taking place at the Buffalo County Fairgrounds in Kearney. So lots of things happening with cattle exhibitors and cattle sales. You'll probably even be able to hear the auctioneer chanting in the background. But we've got a lot of things to look at in this market trade today, including, no surprise, the water cooler talk of the $16 soybeans that we saw. We'll add what's going on not only with the folks in South America and the Russia-Ukraine issue, but markets are closed Monday. What does that mean as we look into Monday night, Tuesday's trade? And of course, we'll take a look at some USDA reports that are due out next week as well.
It may be small, but this little bean fuels a lot of power. It powers a food industry as a top source of protein. It's a fuel that powers diesel engines with fewer emissions. It powers a state economy and bottom lines. And it powers the rest of the world as a top Nebraska export. Yeah, it may be small, but we're finding more ways for this little bean to power Nebraska.
Well, welcome back now to the Nebraska Soybean Board Weekly Market Roundup, and I will bring onto the screen with me Mike Zuzolo. He's with Global Commodity Analytics, and Jeff Peterson with Heartland Farm Partners. And all right, gentlemen, how appropriate, the Nebraska Soybean Board report, and we see beans over $16. We've been talking about this with both of you over the last week, and it's nice to be able to see that price for once. And I want to start out asking you, Mike, what are your thoughts on what you're seeing with this bean contract?
Yeah, it's great to be with you and Jeff again, Susan. I guess I'm going to stick with the program of the idea that for the soybeans to go any higher, they really need the help of the wheat and the corn to project them and propel them higher at this stage, especially given some of the new fundamental factors that we're going to have to deal with when, as you say, we come back from this 3-day holiday weekend. And I say that specifically because of the wheat market and the fact that the hard red wheat finally woke up to a weather market here in the United States. And doesn't mean the South American weather market's still not going on, but there's also talk in the trade this week, and I can't get a good beat on it. Maybe Jeff has a better beat on it than me, but I've been talking to people in Chicago and in the trade pretty much all day Friday since I've heard this. But I've heard earlier this week that there's washouts of beans by China, specifically Brazil, 10, maybe 12 cargoes. What's the reason? They're saying negative crush margins, but here they are trying to rebuild their hog herd. So are the crush margins so negative that they're willing to give up pork production when they're trying to rebuild their hog herd and bring up their numbers? And I think my answer in the short term and what I've been able to find out so far is that they really, I think this zero COVID policy they have has really pulled back on their demand. And I think that they can pull back on their production of pork for a time and maybe get the beans to break. So under that kind of a scenario, and having traded so long the South American weather, I think it's time for the wheat to come in here and the corn to come in here to help the beans out.
All right. What are you thinking, Jeff? I mean, $16 beans, we've been talking about flirting with it, and we finished above it.
Yeah, no, it was great to see. And I mean, it's great to see actually the strength that came back in this market. And, you know, and it is interesting. There was a story, and I'm sure you guys saw it out of Reuters early this week, that they picked up actually out of a news service out of China. That was China kind of trying to talk the bean market back, where they saying, hey, we could reduce our imports 30 million metric tons. And keep in mind, at 100 million metric tons, that's about where everybody kind of thinks they were going to import. That's a 30% reduction. And everybody's kind of, laughing it off. But it is kind of interesting to see the fact that currently we do have some of those washouts happening. The hardest part about some of those washouts, though, sometimes is that we never quite know what's going on behind the scenes there. The talk will be that we're going to see some negative crush margins, and their crush margins aren't real good over there. But it's still hard for me to believe that their pork demand isn't going to continue to increase. And as we go down the road, one of the things that we're looking at there that we think there's still some more room for the bean market to go higher is that our numbers, as we compare basically Brazil, Argentina, and Paraguay production to last year, and we think we're being conservative here, you'd be looking at about 800 million bushels less than there would have been a year ago. And when we take a look at the USDA numbers and look at the WASDE report that came out in February, their demand numbers still look like about a little over 200 million bushel increase of last year. So you've got 1 billion bushels there compared to last year that a person has to kind of deal with there yet. And so that's the unknown over here on, on the supply side coming out of South America. It's interesting over on the veg oil side, which actually kind of helps out the crush demand. I know we're seeing it here in the U.S., but the veg oil, you're seeing palm oil go ahead and put in some new highs in trade here. So it's a very dynamic market, Susan. We still think there's room for some more upside yet.
Well, we look at, and it should come as no surprise to both of you that as they get closer to the Argentine border, those numbers are a lot smaller in that crop. And considering the way the weather has been for both Brazil and Argentina, but it seems like the market acts a little shocked at times.
Well, it is interesting. I mean, Argentine numbers, what we were a little surprised at is that this week, when out of the Buenos Aires Grain Exchange, we take a look at the condition ratings, and the bean number dropped, I think, 6%. And we ended up seeing the corn good to excellent rating drop about 9%. So they're getting back and challenging some of the worst conditions that they've seen. So we think one of the things you're going to see going forward there is that maybe the number coming out of Brazil is getting pretty close. I think it kind of depends on what the weather is in Rio Grande do Sul yet. But we think there's still some lower production numbers to come out of Argentina yet, Susan.
Well, Mike, I heard you chuckle a little bit, and it seems like this market loves to talk a weather talk.
Yeah. Before we went on the air, you and I were talking a little bit, and I said, it seems like a July 4th 3-day weekend instead of, President's Day weekend. Usually February, other than the crop insurance and the USDA Ag Outlook, it's a pretty boring month typically, but this is like a midsummer weekend. I think Jeff made a huge point. One of the big dynamics that's different this year, especially this time of year, kind of reminds me of 2007, 2008, is that vegetable oil market. And we found out Friday that India came in and bought U.S. soybean oil. I think it was around 100,000 tons, and they may actually come in and buy more. And that was a record just at 100,000 tons. So you can see that Southeast Asian vegetable oil market, it's not backing down. And, what I've always felt like strategically and kind of analytically, Susan, is once you get a high enough price, you look at the most elastic commodities that give way on demand destruction first. And typically that's your meats, that's your vegetable oils, because your consumer basket can't take it anymore. So far, those are not backing down yet. I think they are in real time, but the trade doesn't see it yet.
Well, as we continue here at the Nebraska Soybean Board Weekly Market Roundup, brought to you by our Nebraska soybean farmers and their checkoff, I wanted to ask you, Mike, because we had this discussion last week on this program, and that was the old weather map and what's been happening. This latest drought monitor is not a pretty picture.
No, I'm truly getting scared about it. And I was actually doing some research on 2011 and 2012, and the Kansas City Fed did a great report on the cattle industry over the long term not too long ago, and I was digging into that, and the author reminded us that we lost about 60% of our numbers by the time we got to June of 2012 because it was in the heart of the Southern Plains, heart of the hard red wheat belt, heart of the forage areas, and obviously heart of the cattle country. So when I see the sorghum area at 82% drought, and I see winter wheat at 72% drought, and I see cattle in agriculture and drought at 60%, I think we start needing to start ringing some alarm bells here.
All right. Speaking of alarm bells, could we see something exciting, Jeff, in next week's USDA report?
The interesting one, anytime you get the Outlook numbers coming out, it's always interesting to see, the trade. For us, the biggest things to always kind of take a look at out of that is that we'll get a really good feel of what they want to use for trend line yields for corn and for soybeans. As you get into those reports, we realize that they're not survey-based, they're model-based. And, so they're going to throw some numbers out. We think what they'll come out with will be some slightly lower on the corn acres, maybe steady to slightly higher on the bean acres from where we would have been last year. But the big thing that's interesting about this year and how those numbers could come out from, there's so many different crops that are competing. There's some tightness, and whether you're in the Southeast or in the South and you're talking about cotton or you're in areas where there's wheat, there's a lot of demand. And that's where we think that probably the Outlook meeting is going to kick off in a bigger way, this whole discussion about acres. And you couple that with your great points that you made, Mike, about ultimately these dry conditions and where that's at. And what does that mean for these dry conditions where it looks like the La Nina is going to hang on a little longer? And not only just what we've seen so far for moisture, but then we also take a look at the long lead forecast that NOAA brought out, even though we know that as you look out 90 days, ultimately that's very hard to be able to have a lot of confidence in in what basically the weather models are saying there. But the point is we're going to get close to this U.S. growing season, which there's going to be a lot of volatility brought in with that this year.
Well, as we mentioned at the top of the show, markets are closed on Monday. So I want to get both of your thoughts on this with Russia and Ukraine and not knowing what's going to happen with them. Still more weather talk. South America may be releasing some more harvest numbers through social media. What are you thinking, Jeff, on Monday night into Tuesday?
Well, our overall thought, and it's interesting, so let's just break this down into pieces. I mean, we're going to be coming in our opinion, to be is from the weather perspective, the weather's going to look a little better in South America coming into Monday. They're going to pick up some range probably in some of the drier areas of Argentina and maybe even some of the areas of Brazil as we get Sunday. And if it isn't happening, then it'll come in on Monday. And then you take a look at this conflict between the potential invasion between Russia and into Ukraine. And in our initial feeling had been is that we probably have a risk off if something like that happens. But the more we're kind of seeing this market trade, we're actually thinking that if we do see an invasion of Russia into Ukraine, we think it's going to be pretty supportive of the market. We know that's going to make the crude oil market run. So that's kind of what we're looking at, Susan.
All right, Mike, for you, what are you thinking?
Well, the big thing for me, Susan, is when we went into Russia went into the Crimea and the other part of Ukraine back in 2014, we had the Euro crisis, the Greek crisis. It seemed to kind of kick off some real problems. And so I really want to watch the dollar, especially after the USDA gets done talking about demand in their Outlook meeting. That dollar went from about 80 in June of 14 all the way up to 102.50 by December of 16. So that's the key, I think.
All right. We covered a lot of things, gentlemen. Thank you so much for joining us this week. And of course, just a reminder, commodity futures and options do involve a substantial risk of loss that are not suitable for all investors. That's been the Nebraska Soybean Board Weekly Market Roundup, brought to you by Nebraska soybean farmers and their checkoff on the Rural Radio Network.